For decades, spanning generations, Canada and the United States enjoyed a uniquely close partnership, a bond that was often touted as the envy of the world. It was a relationship built not just on trade, but on deep cultural ties, shared security interests, and a common vision for the future, built on shared values and the world's longest undefended border. This border, a symbol of peace and mutual trust, facilitated the easy flow of people, goods, and ideas between the two nations. NAFTA cemented this relationship, solidifying the economic interdependence that had been growing for years, creating a deeply integrated North American market. Supply chains crisscrossed the border, and businesses on both sides thrived on the predictability and stability of the trade agreement. Canadian businesses built their supply chains around this reality, investing heavily in infrastructure and partnerships that relied on seamless access to the U.S. market, assuming the partnership was permanent. The idea that this deeply entrenched relationship could be fundamentally challenged seemed almost unthinkable. But with President Trump's arrival, everything changed. The foundations of the relationship, once thought to be unshakable, began to crack under the weight of a new political reality. His America First doctrine challenged the post-war order, prioritizing domestic interests above all else and questioning long-standing alliances, recasting Canada from trusted partner to competitor. Trump called NAFTA the worst trade deal ever and threatened to tear it up, sending shockwaves through the Canadian economy and political establishment, using public, aggressive tactics instead of quiet diplomacy. The traditional channels of communication and negotiation seemed to be bypassed in favor of public pronouncements and threats. For Canada, the threat of losing U.S. market access was existential. It was a challenge to the very core of its economic model. Industries from Ontario's auto sector to BC's lumber were thrown into turmoil. Businesses faced uncertainty, and workers feared for their jobs. The very foundation of Canada's economic strategy was suddenly in question. The assumptions that had guided Canadian policy for decades were now being challenged. This was more than a trade dispute. It was a fundamental re-evaluation of a relationship once taken for granted. The comfortable assumptions of a shared future were shattered. Canada now faced a new reality. Its closest ally had become its most unpredictable economic adversary. The rules of the game had changed, and Canada had to adapt quickly. The era of quiet confidence was over. Canada was entering a new and uncertain chapter in its relationship with the United States. Trade blackmail, using economic threats to force concessions, became the new norm. The U.S. threatened to withdraw from NAFTA, holding Canada's prosperity hostage to extract maximum benefit. Canadian negotiators faced immense pressure, operating under the shadow of economic catastrophe. Tariffs on Canadian steel and aluminium, justified on flimsy national security grounds, inflicted direct economic pain. These moves were less about security and more about leverage in NAFTA talks. Trade, once a positive-sum game, became a conflict, introducing instability and risk for businesses. The use of trade blackmail eroded trust and made the global economy more unpredictable. For Canada, it was a wake-up call. Even the closest partnerships could be weaponized. The rules of the game had changed. Canada's initial reaction to the sudden shift in U.S. policy was one of utter disbelief. The news spread like wildfire, leaving a trail of stunned faces in its wake. Politicians, government officials, and ordinary citizens alike struggled to comprehend the magnitude of the change. It was a moment of collective shock, a shared sense of bewilderment that hung heavy in the air. How could a trusted ally, a nation with whom Canada shared so much history and so many values, turn so hostile? The question echoed across the country, fueling a sense of betrayal and uncertainty. Decades of close cooperation and mutual reliance seemed to crumble overnight, leaving Canadians to grapple with the unsettling reality of a fractured alliance. Political leaders scrambled to respond, convening emergency sessions and holding urgent meetings to assess the situation. The gravity of the crisis was palpable as lawmakers grappled with the challenge of navigating uncharted waters. The weight of responsibility pressed heavily on their shoulders as they sought to formulate a coherent and effective response. Caught between the imperative of defending national pride and the urgent need to avoid a devastating trade war, Canada found itself in a precarious position. The stakes were high, and the path forward was fraught with uncertainty. The government had to carefully weigh its options, balancing the desire to stand up for Canadian interests with the need to protect the nation's economic well-being. Trudeau's government attempted to balance firm rhetoric, reassuring Canadians of their resolve, with a willingness to engage in diplomatic negotiation, seeking a peaceful resolution to the escalating conflict. The Prime Minister walked a tightrope, striving to project strength and determination while simultaneously leaving room for dialogue and compromise. The government sought to unite Canadians, rallying them to a united front in the face of external pressure. A surge of patriotism swept across the nation as citizens from all walks of life rallied together to demonstrate their unwavering support for their country. Economic uncertainty spread like a dark cloud, casting a shadow over businesses and households alike. The stock market experienced a period of volatility, reflecting the anxieties of investors and the broader business community. Investments stalled as businesses hesitated to commit to new projects amidst the prevailing uncertainty. The flow of capital slowed to a trickle, as investors adopted a wait-and-see approach, hoping for greater clarity before making any major decisions. Supply chains, the intricate networks that underpin global trade, were re-examined and scrutinized for vulnerabilities. Businesses sought to identify potential disruptions and develop contingency plans to mitigate the impact of any trade-related shocks. And the Canadian dollar fluctuated wildly, its value rising and falling with every tweet and pronouncement emanating from Washington. The currency market became a barometer of political sentiment, reflecting the ebb and flow of tensions between the two countries. Ontario's auto sector, a cornerstone of the Canadian economy, was especially vulnerable to the shifting trade winds. The industry faced the prospect of plant closures and job losses, as manufacturers grappled with the potential impact of new tariffs and trade barriers. The auto sector felt threatened by new U.S. demands, which could have crippled its competitiveness and undermined its long-term viability. The industry braced itself for a period of intense negotiations, hoping to secure a favorable outcome that would safeguard its future. The constant risk of tariffs or the potential collapse of NAFTA, the North American Free Trade Agreement, created a climate of anxiety and significantly slowed economic growth. Businesses hesitated to invest and expand, fearing that the rug could be pulled out from under them at any moment. This crisis forced Canadians to confront their over-reliance on the U.S. market, a dependence that had long been a source of both prosperity and vulnerability. The need to diversify Canada's trade relationships became increasingly apparent. Amidst the turmoil, a new consensus emerged among political leaders and business leaders alike. There was a growing recognition that Canada needed to chart a new course, one that would reduce its dependence on the United States and open up new opportunities for growth and prosperity. Canada needed to actively diversify its trade relationships, forging stronger ties with countries around the world. The focus shifted to exploring new markets and building partnerships with nations in Europe, Asia, and Latin America. The old assumption of permanent U.S. goodwill, a cornerstone of Canadian foreign policy for decades, was shattered beyond repair. The trust that had underpinned the relationship between the two countries had been irrevocably damaged. The shock was painful, a stark reminder of the fragility of international relations and the importance of self-reliance. The economic pain was felt across the country as businesses and individuals alike struggled to adapt to the new reality. But it also sparked a strategic pivot in Canadian policy, forcing the country to re-evaluate its priorities and chart a new course for the future. The crisis served as a catalyst for change, prompting a fundamental rethinking of Canada's place in the world. Diversification was no longer optional. It was essential for Canada's long-term economic security and prosperity. The country embarked on a mission to broaden its horizons and build a more resilient and diversified economy. Canada began to look beyond its southern neighbor, seeking new opportunities and partnerships in Europe and across the globe. The country set its sights on becoming a more active and influential player on the world stage, forging new alliances and expanding its economic reach. In 2018, a seismic shift occurred in North American trade relations. The United States, under the banner of national security, imposed tariffs on Canadian steel and aluminum. This move marked a significant turning point, a crossroads where long-standing alliances were tested and the future of trade hung in the balance. Invoking national security as justification, the U.S. administration imposed steep tariffs on these key Canadian exports, disrupting established trade flows. The decision was widely seen as both insulting to a trusted ally and a blatant act of protectionism, designed to shield American industries at the expense of its northern neighbor. Canadian steel towns like Hamilton, Ontario, the heartland of Canadian steel production, suddenly faced the grim prospect of layoffs, plant closures, and widespread economic uncertainty overnight. The impact was immediate and deeply felt. The economic blow to Canada was immediate and severe, rippling through communities and industries that relied on the steel and aluminum sectors. The tariffs threatened thousands of jobs, casting a shadow of anxiety over families and communities dependent on these industries for their livelihoods. In response, Canada retaliated swiftly, announcing its own tariffs on a range of U.S. goods, carefully targeting politically sensitive U.S. products in an effort to exert pressure and force a reconsideration of the American position. This tit-for-tat escalation of tariffs and counter-tariffs brought relations between the two nations to their lowest point in decades, straining a partnership that had long been considered unbreakable. The dispute symbolized a profound breakdown of trust and cooperation, exposing vulnerabilities in the supposedly secure trade relationship. For Canada, the experience served as a harsh lesson, a stark reminder that even the closest and most deeply integrated trading relationships could be weaponized for political gain. The experience profoundly reinforced the urgent and critical need for economic diversification, reducing reliance on any single trading partner. Ottawa came to the stark realization that national security now depended on actively reducing its over-reliance on a single trading partner, and building a more resilient and diversified economic base. The trade war served as a powerful wake-up call, an alarm bell signaling the need for a fundamental shift in strategy. Canada resolved that it would not be a passive victim of protectionist measures, but rather an active participant in shaping its own economic destiny. And so, the search for new partners and new markets began in earnest, marking a new chapter in Canada's trade policy. With the U.S. relationship in crisis, Canada turned to Europe. The EU, a vast market, offered a powerful alternative. The Comprehensive Economic and Trade Agreement, CETA, became a strategic lifeline. Trudeau's government launched a diplomatic push, promoting CETA as a model for progressive, rules-based trade. The message Canada and Europe stood together for open markets and shared values. Government agencies helped businesses seize new opportunities in Europe. The pivot was about more than economics. It was about forging alliances based on mutual respect. Canada signaled it was not isolated, but part of a global network. The turn to Europe marked a decisive step toward a more independent foreign policy. CETA was more than a trade deal. It was a blueprint for modern progressive commerce. It eliminated tariffs on nearly all goods, giving Canadian exporters a level playing field in the EU. The agreement opened doors for services and government procurement, creating vast new opportunities. CETA's strong commitments to labor rights and environmental protection set it apart. It was designed to align economic growth with social values, countering anti-globalization critics. The deal's accelerated implementation, spurred by U.S. tensions, marked a fundamental shift in Canadian trade policy. Preferential access to the EU hedged against American protectionism. CETA became the cornerstone of Canada's new global trade strategy. Canada was now open for business with partners who valued rules and stability. The pivot to Europe produced real, measurable results. Within 2 years of CETA's application, Canada-EU trade surged by over 25%. Exports of key products like aluminium soared as new markets opened. Canadian firms established European offices and partnerships, creating jobs and resilience at home. European investment in Canada increased, fueling growth and innovation. The relationship became a two-way street, deepening economic integration. The mental map of Canadian business expanded beyond the U.S. CETA's success inspired further diversification, including the CPTPP. Canada emerged as a champion of global free trade. The U.S.-Canada trade conflict reshaped global alliances. The once united North American bloc fractured, exposing rifts in the Western Alliance. Canada responded by building coalitions with like-minded partners, most notably the EU. The Canada-EU axis became a powerful voice for rules-based trade, countering rising protectionism. Canada's independent diplomacy elevated its global standing. Meanwhile, the U.S. found itself increasingly isolated as allies forged new networks. The world's economic chessboard was being redrawn, and Canada was no longer just America's junior partner. The trade disputes with the U.S. left a lasting mark on Canada. The key lesson: economic diversification is essential for national resilience. Canada's future now depends on a broad network of global partners. The bond with Europe, anchored by CETA, is a central pillar of foreign policy. Canada is also deepening ties with Asia-Pacific economies through the CPTPP. The US remains important, but the relationship is now approached with realism and caution. Canada will defend its interests vigorously, no longer relying on naive trust. Ironically, US trade blackmail pushed Canada toward a more independent, globally engaged future. The country is now more confident, diverse, and prepared for a complex world. Canada's new path is one of resilience and global ambition.